What's up, Bat Fam? Welcome back to the Builder Trader YouTube channel. This video, I'm going to be talking about price action confluence trading. Now, this trading style and strategy and way of viewing the markets is exactly how I trade. As promised, as I said in the Telegram channel and on my Instagram, this is going to be the next video I was going to make. This is going to be a two-part video series as this is a lot of information to cover and I don't want the video being too long for you guys. This strategy is not fancy, it's not anything new. You can find this all over if you look in the right areas. Now, before I head to the charts and show you guys the secret sauce, please like this video, subscribe to the channel, and follow the Instagram pages at BuilderTrader, at BatSignals, and let's get to it. Alright, Bat Fam, here we are on the charts. Right now we're looking at USD JPY. And honestly, I just recorded this entire video for you guys, and the screen recording software crashed right when I was about to press stop. So here we are again, running it back from the top. Alright, so this trading strategy, like I was saying, is called Confluence trading. I learned this trading strategy from Q Banks. I am a Wall Street Academy student. I started trading this way about 1 year into my trading journey. So I've been doing this for 5 years now, and I have adapted this to my own style and certain setups and ways of trading that I personally use. And there's a few things that I no longer use that I learned. Okay, but this is what I still use and what I find to be highly effective. So number one, and this is listed in order of importance. Number one, price action. With any trading strategy, price action needs to be the number one thing. Price action is the most important. Candlesticks. Look at the candlesticks. Price action / candlestick analysis. That's what everything will come back to. Does not matter what anything else is doing. Number two, which is just as equally as important as number one, but since I'm making a list, I'm putting it as number two. Market structure. Price action and market structure go hand in hand, and you need a very strong understanding of both concepts just to be even able to trade. Okay, let me take a drink of this real quick. It's actually hot in Seattle today. All right, so market structure and price action equally as important. You need to have a strong understanding of both, knowing what higher highs and higher lows look like, knowing what breakup structures look like, so on and so forth. Okay, number three, supply and demand. There it is. Supply and demand. Supply and demand is also the same as support and resistance, which I also use. Support and resistance, supply and demand. Both of these concepts also go hand in hand, as if you didn't already know, support and resistance and supply and demand often line up with each other. However, supply and demand covers the extreme ends, like the wicks, the extreme ends of price, and support and resistance covers the median, where price respects the most. And I'll show you examples of this here shortly. Number four, trend lines sometimes. I do apply these on certain setups, certain breakout patterns that can be found. And I'm also going to apply one to this chart because it's very valid and it's very apparent. But sometimes trend lines. I don't go out of my way looking for trend lines. I do not use trend lines all the time, but when they are there, I do apply them because I see them clearly. But only if it helps aid my analysis, not if it's noise or if it helps clutter my chart. I mean, not helps, but if it clutters my chart to where I can't see anything, you don't need it. Okay, but I do apply them. And lastly, which I rarely use, Fibonacci projections. I do not use Fibonacci's for retracements. I don't use them, for 38.2, 61.8, 78.6, 88.6. I don't use those retracement levels. I don't use the Fibonacci in that way. I don't need to because these other technicals already tell me the same thing that would. And oftentimes, the Fibonacci can cloud your mind and make you see things that aren't really there in the chart because it's a tool. It's a Fibonacci retracement tool. Okay, what matters is price action and market structure. And oftentimes the Fibonacci can get you locked into trades that aren't necessarily valid based off price action and market structure. Okay, but I did used to use it a while ago, but I do not use Fibonacci's really anymore as of like for a few years now. Fibonacci projections / extensions, and I use the negative 61.8. I'm sorry, I'm gonna start with negative 27%, and these negative 61.8% levels for take profits. That's it. Potential take profits. Okay, that's all I use the Fibonacci's for, and they're used on the higher time frame to find potential swing points, potential higher high and higher low swing points based off your weekly and daily and 12-hour time frame. Okay, not the intraday time frame, although they can be applied to that as well, but I do not use them for that anymore. Okay, so we're going to start on the weekly time frame. Take a picture of this. You need to know these concepts right here to use this strategy. And I'm going to apply all these technicals here shortly, but the reason why this trading strategy is called Confluence trading is because these technicals, applying these things is called technical analysis, and trading is the art of technical analysis when you understand trading very well. So to understand and apply all these technicals, and if they are to line up with each other, it's called confluence. Multiple technicals lining up with one another, okay? So take a picture of this, we're about to move on. So starting on the weekly time frame, like I was saying, I use support and resistance and market structure. So first I'm gonna add a few levels only in the areas that matter. Currently, this is where price is, so I don't care about what's going on the left down here. But right now, if you don't already see it, there's a higher low point here. You can see the market was trending bullish, higher high, higher low, higher high, okay? And if you don't understand that, I have a few market structure videos and a whole playlist actually, so go ahead and check that out if you don't understand that concept. So we have a major level of structure here and major level of support. And we have an area of resistance that had to break to make this higher high point that we're at. There's an area of resistance here because that's where we just rejected from and are coming down. And these are all based on the weekly, so these are very important. The fact that you can see them on the higher time frame means that these are highly probable areas of reaction / good areas for potential trades. So it's very important you have these areas marked off in some type of way. And you can actually add a text box on it if you want, add some text on it to help you identify what that level is, but I don't even do that. I know what this is. I've been trading this way for almost 5 years now, so I don't need to mark my stuff off like that anymore because I know where these levels are, where I place them. So I'm actually going to add one more level right here, and I'm going to refine this once I drop down to the daily time frame and 12-hour. But there is something right here, and you can refine these areas like I was just saying once you drop down to like the 1 day, the daily time frame, the 12-hour time frame. But as you can see, I just marked this on the weekly, and you can see how price is respecting these areas already just on the next time frame lower. Resistance, support. Now I'm going to refine this because it's really kind of down here. Price is respecting this area right here more than it was up here. You really want to use support to try and capture the wicks or the median of where price is respecting. As you can see, this is where the median is. I'm going to add one more level here because there's something here that I can see on the daily time frame. This is resistance before it broke up, made a higher high, a higher low, and then another higher high. So that's an important level. Okay. Next, there is actually something right here as well, based off how price reacted from this area. But this will be more apparent, and you'll be able to see it more on a lower time frame. Now, applying these technicals and everything is one thing, but understanding how to trade is a whole entire other thing. Because all I'm showing you right now is a way to identify which way the market is moving and identify whether something's bullish or bearish. But to teach you guys how to enter and exit and manage risk and so on and so forth, you should consider joining my Telegram channel. I call trades and send analysis daily, and I also offer a premium mentoring channel and service. And all my trades and trading style is based off of these concepts here. See support and resistance clearly on the daily time frame here. And now we're going to use the supply and demand concepts. So this area is considered an area of demand. Now, demand could be seen as support, and supply could be seen as resistance. Now, there was an area of supply here, as you can see, the wick rejections, and like I was saying, supply and demand covers the extreme ends of price, the wicks. Now, you can draw these a few different ways, And they also can be drawn on multiple different time frames. They can be drawn on all time frames actually. But like I was saying, the higher time frame areas matter the most, because if you only pay attention to the lower time frame areas, the intraday levels and like the 1 hour and 30-minute levels, you're going to miss these big moves, and two, you're going to be on the wrong side of the market. You're going to misanalyze what's really happening because you're looking too closely. Okay, so keep that in mind. But there's an area of supply right here. It broke through, came down, retested as support, and then continued higher. There's an area of supply right here. I'm going to go ahead and add a few more things here shortly, but this is what we can see on the daily time frame so far. So now we're going to go one step lower. I actually have one more thing to add. You can also apply a trend line, and this is very apparent down here based off all these wick rejections making higher low points. But with trend lines, you can draw them in multiple different ways. Some people like to draw them very closely, like for example, like a long like that, but I don't like that. I don't think that's valid. I like to use the trend lines based off extreme ends. Okay, as you can see, tap, 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 price came down, eventually hit this too. Another thing I want to point out before moving on is that with these major levels, prices will always come back to them. The market always comes back to these major points at one time or another. Now that doesn't mean it will come back the next day or next week, but it might happen the next month or however long, it doesn't matter. The market will always come back to these important areas at some point in time. Okay, so this trend line was being formed here, and I had already had all these levels marked up. I can show you my other chart here shortly, but I call this 1 to 200 pip trade here on USD JPY, and I'll show you that example once I finish marking things up. But this is how you want to start viewing your charts. Essentially, you're looking at the price action, higher highs and higher lows. You can see technical areas where price is respected from and are reacting from. It's important to know these areas because that's where you take potential trades. Next, I'm dropping down to the 12-hour. So what can we see? Clear higher low, then a higher high. Then what happened? I'm going to draw some arrows here. Price came down and respected, tried to make a higher low, and then made a lower high ultimately. Now, if price was going to continue bullish, it needed to push higher and break through, but you can see that it didn't. It clearly made a lower high. Now we can go to a lower time frame and refine this area a little more and see why and how it respected from this area. Why did it wick off from here? And this is where you start applying your intraday levels. Okay, so after you have an understanding of market structure and price action, you know that higher highs and higher lows are in an uptrend. Look at this little area here. This is how I identify this area for sells. I'm going to adjust this supply, area of supply here. Just wanted to cover the extreme ends of the wicks, and these wicks, the tops of these areas that you'll see on the 12-hour, it will only cover the wicks on the 12-hour time frame. There is an area of support right here that was broken because an uptrend makes higher highs and higher lows. So we start down here, higher low, higher high, higher low. What needed to happen next right here? A higher high, but it didn't. It made a lower high and then went lower all the way down here. Okay, so the fact that this point broke, this is a break of structure and a shift in trend direction. So you can see that, okay, we were going bullish, now we're bearish. Now, I'm gonna remove this arrow because you can clearly see what I just illustrated. You can add an area of supply right here on the 4-hour time frame. Now on these lower time frames, the intraday levels, if you are to add supply and demand, you can apply it to the wicks like I just did or adjusted, but you can also cover the candle body as well. And that's what I'm going to do here, and this is how I had it on my other chart. You can clearly see this in the area of supply here, okay? So after prices pushed bearish down to this point, it reacted from this area for a few reasons, because one, it was the previous area of resistance, and two, prices, like I was saying, these areas often act like magnets, and after a certain point in time, price will come back down and retest them or break through them. In this instance, it retested as support. On the overall time frame, is pushing bearish, and after it reacted from this area, it needs to come up and make either a higher high or a lower high, depending on what the next overall move is. And in this instance, it made a lower high. Okay, so continuing on with the arrows, lower high here. It reacted from here because I just identified this was a break of structure, a break of support, and an area of supply. Two reasons, two confluences as to why prices could react from this area, or something could happen from this area. And as you can see, we rejected pretty hard and ultimately went bearish very quickly. Now, identifying these areas is one thing, like I was saying, but how do you trade this stuff? How do you get into these moves? Okay, so you have these points of reaction marked off based on the higher time frame. Now, knowing that, you're going to go down to a lower time frame for an entry price, and I'm going to make this video as short as possible because it can go on for very long based on these concepts, so I'm probably going to make a part 2. But I'm not going to show you how to identify entry candles and stuff like that quite yet, because that takes a little more in-depth explanation. However, I'm going to explain to you and show you examples of the trades that were called on my channel this week, as well as how I caught this trade here as well. So we're going to start with this first, and I have multiple examples to show you, even losers as well. Okay, but let's dive into it. So I caught the sell right here because based off the two reasons I just explained, supply and a strong area of resistance, previous broken support, and an area of broken market structure. So right here is very important. If we were to break through, it would continue bullish, but the fact that I rejected right here, this would be considered a make or break point in my opinion. I consider these areas make or break points. So right here, it's either going to break through, continue bullish, or it's going to reject and go down. Okay, so it's important to identify what happens in these areas. So we're going to go down to the 2-hour time frame, actually to the 1-hour time frame. I called this trade between these two prices. I'm just going to type it up because I remembered off the top one. 7.0 through 139.0. Stop loss was 139.2, and the take profits were 137.700 and 136.700. Okay. Now keep these numbers in mind. Okay, this is the trade. This right here was the entry price. This right here was the stop loss. This right here was the take profit price. Okay. So we entered sells, identified this based off of a few things. This area was already marked up. I already had the trend line and everything. These areas of supply marked up, this area of resistance. I was watching this. Watch this move go down, watch it go up. I was waiting to watch this area here to see what happened. Are we going to break through or are we going to go down? I called sells because I identified something on the lower time frame, the way it reacted. Because look, see, we came into this area here. This is where price action and market structure are extremely key. This is the most important thing for any trading strategy. This is why you need a strong understanding of price action and market structure. So what happened? Higher, high, higher, low, higher, high, higher, low. What needs to happen next right here? It's going to continue. It needs to make a higher high. Okay, it didn't. It tried to push, then rejected right off this level here, creating a double top. You could call it a double top pattern on the lower time frame or a lower high, either one. So I called this trade 138.7, which is right where I have this risk reward tool right at that entry price, up to 139, which is up in this little area, extreme area here. Stop loss just above it, just in case, because if it breaks through, then in my opinion it's going to continue higher. Okay, we got our take profit down here, take profit 1 down here, and then we also, I'm just going to add another tool right here at 136.7. Okay, all the way down at this level. Okay, now I had the first take profit right here for one reason, because I wanted to take profits before it hit that level, because it's important to secure the gain. And it literally hit our take profit point right here and then came up. So there's a reason for that. Other people, other traders, other sellers were looking to take profits there too. Okay, so that was wise to take profits there, but ultimately went lower. Made a lower high, made a lower low, lower high, and then lower low down to our next take profit point, which was this major level that I drew. Okay, an area of previous resistance. Prices ultimately came down, then broke through that as well down to the trend line. Now, in trading, you're obviously going to want to catch the whole move, but that's not going to happen. So the fact that I even caught this big of a movement is quite insane. You know, we definitely ate on this. This is a 100 to 200 pip move, depending where you close and manage your positions and so on. But it ultimately fell for 300 pips. But that's how I caught this trade, because of the way it reacted in that area. Okay, you can see that prices are moving bearish. I explained to you that it either needed to push bullish right there, or the fact that it rejected showed that it was bearish. And you can see here on this 4-hour time frame, after that point, it came down lower low, lower high, lower low. Okay, after this point, either might break through or might make another lower high point, but you know, that will happen at a later time, sometime next week, but that's irrelevant. So this is how you mark up your charts. These are the technicals I use, and here is also how I found these take profits, which you can also use the Fibonacci tool, Fibonacci retracement. Now, if you don't know how to apply Fibonacci's in an uptrend, you apply them from bullish candle to bullish candle, okay, from your high to your low, and in a downtrend from your low to your high. But I'm just going to show you an example how to draw it from a bullish perspective. Yeah, you have from your low to your high. Let me fix this. Like I said, I don't use Fibonacci's for these higher low points. You see hit at 38.2, but I don't use it for that. I'm using these Fibonacci's at potential areas right here. These things, this negative 27% and the negative 61.8%. These are the only things that matter to me on this tool. I could care less about this stuff because, one, I know where these areas are already at based off of support and supply and demand, support and resistance and supply and demand, and two, I know where my stop loss is based off of structure, okay? So you don't even need the fibs for these retracements. The only thing I look at is the potential take profits, okay? So I can show you how I identified this area as a potential take profit. So given the concept I just told you, and let me zoom out real quick to the 12-hour. Oops. So, high to low, and I use this off the lower time frame. That's what I use this on. I targeted this bearish candle here. I did not use this wick. Maybe I did. Yeah, no, I didn't even use this wick, truthfully, at this point in time. I was just targeting, I just covered this bearish candle here, because a lot of times, if you cover the extreme ends, it makes these targets a little ambitious. Okay, but you can see this fib hit 137.14 based on the higher time frame, but I was targeting that area based off of the fact that it needed to be broken to continue. So it could have reacted from here and either did that, you know, hit another retracement if the market wanted to, but it didn't, it broke through. But that is why I had the take profit set down there, and the one down here, because one, there's a level here, and two, the Fibonacci was actually below it. But I wanted to take profit at the major level, because sometimes, for example, right here, you may have been targeting and been like, okay, yeah, it's going to come back down to this trend line area, but it didn't this time. Okay, but if you target these levels instead, they have a higher probability of hitting, and in turn, you are more consistent. But you can use those projection levels that I just showed to show potentially where the market may go to find greater take profit points. But as you can see, you can get locked into that by looking at only those things and not the price action. Because like I just showed you, it didn't happen over here. Okay, so have you just been hoping for that, you would have missed out on potential profit if you just take profits at these levels. Okay, so I'm gonna show just a few more examples because this video's already gone pretty long. But here, we'll go to the NASDAQ 100, called this move. I'll show you the loss first. But we caught these buys for 350 pips here on the NASDAQ this week. But I call it buys right here on Monday because I was thinking it would impulse through like it did over here on the right side. Okay, it was the same exact trade idea, setup, everything, just the context was incorrect at this moment in time. At this moment in time, at the start of the week, every single person who trades these indices was thinking the same, well, not every single person, but everyone who was bullish was thinking the same exact trade idea, right? But that didn't happen. We rejected and came down. Okay, so this would be considered an impulse entry, which I can explain in another video. But I have these have this chart marked up exactly how I just showed you, based off of the higher time frame levels, supply and demand, so on and so forth, right? Same thing. So this trade failed, okay? Using good risk management, we only lost 1%, but had you over leveraged or did something crazy, would have blown your account, perhaps, or not use a stop loss, who knows? Anything could have happened. But once the market came back up to this area again, in my mind, I knew the context was correct this time because one, the market needed to break through this area. Oh, I'm sorry, it wasn't here. The trade idea was called here on Monday. This was 2 weeks ago. The trade idea was called here. It broke through, got out at 70, broke through, came down. And we had a stop loss here because ultimately just smashed right through. But once prices lined up back to this area again, people were thinking sells because of the fact that it reacted from here. But in my mind, I knew this was buys because of the given reasons. The same exact context, but it was correct. There's a lot of bullish momentum, and to sell against us would be absolutely insane. It ultimately blasted right through, came up, hit this major area where I had to take profits a little before, right in this area of supply at 12300. Same exact reasonings as I just explained in the USD JPY sell. Then price ultimately pushed a little higher, came down, made a higher low, and then exploded up to our second take profit point at 12500, which is slightly below this area of resistance, but it's still ultimately pushed through later on. But the fact that we closed a little before is still fine. Okay, you're not going to catch the entire move of a trade. Like, I still to this day have not caught every single last pip in a move. Okay, the fact that you even want to try to do that is how you will not become profitable or consistent. So there's two examples, one losing example, two winning trades based off all these concepts, based off these levels. You can see how price is reacting from these levels. If you have them marked up in advance and set alerts, then you can see and already have an edge, a leg up on the market, because you may already know what will happen beforehand based on these levels and how price could/should react from them. Now, there's a lot more that goes into this trading strategy, and like I said, shout out to Q Banks for Wall Street Academy, but there's a lot of stuff that goes into this trading strategy, and it's a lot more than just applying these technicals, okay? And if you want to know more about the strategy now, you can go ahead and join my Telegram and follow the Instagram pages. However, I will have a part 2 on this video going into more examples as well as just applying the process again. Please like and subscribe to this channel as it helps me grow and motivates me to create more content for you guys, as well as consider joining the free Telegram channel. Like I said, I offer daily analysis as well as 3 to 5 trading signals per week, all based off these concepts here, as well as I offer a premium mentoring service now. And there have been a few students with it, and so far the students have been doing very well, so that's fantastic to hear. Some are already catching their own moves. If you aren't already following the Instagrams, go ahead and do so. Build a Trader, Bat Signals. I'll see you guys in the next one. Peace.